All right, I have a lot of stuff, a lot of charts that I want to share with you guys. I've been posting quite a bit today, and I got a lot of good charts.
Perfect.
Especially, I don't always post weekly charts, and so I think I want to talk about them, give you guys a little commentary. So I want to look at this 65 minutes real quick with you guys, and then we'll kind of review some of those charts that I've been posting on X today. So look at this is Spider 65 minute chart, as you can see. This gap, there was an up gap from this morning that just got filled. You see, this is where we closed on Friday. This is where we opened. So there was a gap. It's been hovering just above the up gap. And then on the last hour, it finally got filled, right? So when it did get filled, what happened? There's my long-term moving average. There's my mid-term moving average. Not to mention, there's that pivot there. You see right there, prior resistance. There's a shooting star candle right there. New support, and that shooting star is acting as a new support. Hence that we do have that hammer candle on the last hour, and it's also coinciding with this falling pivot here. That you see that purple resistance right there. Just follow. You see how it goes right through it. So there was actually up gap, acted as support, midterm, long-term, prior resistance, and the prior falling resistance possibly acting as new support as well. And that's why we did see that hammer candle on the last hour, the oscillator, however. And you might wonder, why did we not see a follow through to the upside after clearing the falling resistance this morning, right? And then we saw that up gap this morning. Why didn't we see a follow through to the upside like it did on Friday morning? As you can see here, we gapped up, and then we saw that follow through pretty much all throughout the day, but we did not see something similar because, as you can see, when we did see that gap up, that oscillator was already sort of resetted, not all the way though, to the bottom of its band. So that means bulls had energy left to push.
Perfect.
But it's different scenario today because, as you can see, that oscillator is at the top of its band. It means bulls are tired. So this is a kind of a situation where bulls are going to be vulnerable, especially if we see some kind of a down gap. Bulls need to dodge a down gap. And if we do see a down gap tomorrow morning or any kind of a decline, bulls want to make sure this island up gap is protected. Like, remember, Boss Bear Command Center at 5:15. What the bears have achieved after that, this down gap was never filled. Bulls achieved something even greater. They built an island up gap. This island gap is actually stronger than this regular down gap. Can you imagine? Because we're still in a primary long-term uptrend. Can you imagine what bulls can achieve by protecting this island up gap? But nonetheless, bulls are tired. They need to reset that oscillator somehow, some way. And can the bulls hang on and protect this up gap? Because bears gonna start to sniff this out. Bears gonna know, okay, it looks like from today's price action, bears gonna say bulls are getting tired. So bears gonna try to push here. Best bet for the bulls is to gap up again, to retest this falling resistance and pretty much move sideways all day like it did today. And during that process, have that oscillator reset. So just keep in mind, bulls are tired. Bulls are going to trying to correct through time while the oscillator resets. I actually tweeted this or posted this on my X account on Friday. This is a weekly chart. Showing you guys one white soldier here and then bullish Harami. Bullish Harami is confirmed as of today. If you look at your weekly chart now, we have like a little tiny candle right here. So for this bullish Harami to confirm, you need a follow through, meaning at the end of this week, at the end of Friday's session, what the bulls need to see is a bullish, healthy looking bullish candle. Nothing, it doesn't have to be too dramatic looking, anything like this. Anything that looks something like this is going to be a healthy bullish follow through, and it will be better if it closes above, right? If it closes above that long red candle body top, it closes above it. That will be even way better for this bullish harami to play out. And if you do see a follow through, there's a great chance that we could see a continuation to the upside on the following week. This is a Tesla. This is a Tesla weekly chart. So what we're witnessing here is it's a little bit tricky here. So you got the bullish morning star, we got the bearish engulfing, we got the bullish piercing. Perfect. And all of this happened at oversold, market goes up. Bullish engulfing happens overbought, market comes down. Bullish piercing happens oversold, we see a gap up, right? So it's important to understand your candlestick patterns in an important pivotal level, such as extreme oversold level or extreme overbought level. If you can understand it, remember this is a weekly chart, meaning each candle represents 1 week worth of data. This weekly gap is extremely rare. Do you know why weekly gaps are extremely rare? Because it only shows up on a chart, on a weekly chart, if it gaps up on Monday morning. So it's a very limited edition. Whenever you see weekly gap up, you always have to know there's a very limited edition, because you are not going to see that up gap, or it's not going to show on the weekly chart unless it was a Monday morning gap up. And this is a rather nice, big, sizable gap up that occur after bullish piercing, that occur after hitting extreme oversold, which we haven't seen since early 23. So it's been a year and a half, right? It came down here, went all the way back up, came all the way back down. And then we see that Monday morning gap up. As long as this gap remains open, if the bulls can protect this up gap from this morning because of my oscillator extreme oversold, there's a great chance they're going to at least bring this oscillator back up here, just like they did here. So that's at least what, 1, 2, it could be a 1 month worth of run we could potentially see. Obviously fluctuations in the intraday, intra-week basis, but that's a very good weekly signal here. Obviously, if we close strong this week, it's really gonna more, solidify this signal here. This is Apple. Apple also weekly chart. As you can see, we have not seen oversold level at Apple coming down to this level since 2019. Obviously 2019 was lower, but if you look at any of these levels, we've never, even 2020 COVID decline did not make that oscillator come down in extreme oversold. That's why it's a weekly chart. Understanding weekly chart is important. But as you can see, that oscillator usually on this weekly, especially when you're dealing with this primary term uptrend, you do not see that oscillator coming all the way down to the extreme oversold zone. 2019 definitely extremely oversold, and that was the bottom, proverbial low before that, and we haven't seen oversold yet in this vicinity. This is first time, but what's really more important is that we hit extreme oversold, we see that bullish cross, and on the weekly sometimes you could see some whipsawing action like this, but rare. You can see right on the weekly oscillator, there's only one time that it whipsawed, was 2023. So if you look at NAC last 5-6 years of data here, did it whipsaw? No. Did it whipsaw? No. Did it whipsaw? No. Did it whipsaw? No. Did it whipsaw? When I say whipsaw, I mean it like crossed up but came back down, right? Did it whipsaw? No. Did it whipsaw? No. Is that gonna whipsaw? I don't know, but I have to say probability of whipsaw possibly low, because only time we saw that whipsawing action was 2023. Every other time we've witnessed that oscillator crosses up on the weekly basis, that thing is going back to the top of his band. There. However, any signals can fail. So let's say this thing whipsaws back down. We want to look for is that little oscillator double bottom right? So how I would place, how I trade this, I would have gone long here when I hit it oversold, right? And then I would ride it, but let's say this didn't come back down, this goes up a little bit, comes back down, I'll buy that dip again and then ride it later. That's how position trading work. Let's continue here. NVDA. So NVDA, this again, also another weekly chart here. As you can see, NVIDIA hitting extremely overbought, extreme overbought, extreme overbought, extreme overbought, right? And only time that thing just completely tanked was 2022. That's the only time. 2020, it moved sideways, gone up higher. Late 2023, sideways, gone up higher. So here, the biggest question is, are we going to move sideways and continue higher, or is it going to roll over like 2022? As long as the overall market, the semiconductor sector and the overall market stays afloat, you see S&P 500, the NASDAQ, and the Dow, and the Russell, and entire semiconductor sector as a whole, if they sort of stay around and shows that long-term bullishness, not the short-term, but the long-term bullishness, you could potentially, prepare for something like, moving sideways, right? We just talked about this on the 65-minute chart. What did I say on the 65-minute on Spider? Bulls need to move sideways while they reset the oscillator. It's the exact same analysis. I'm just looking at it on the weekly chart, right? Move sideways and wait until oscillator reset. Boom, boom, right? That's exactly what I was saying on a Spider. I'm just analyzing a bigger scale. Keep in mind though, this is a weekly chart. So these weekly fluctuations is gonna feel like, you know what I'm saying? Some fluctuations, because obviously these are some ranges that you're gonna have to go through. So that's kind of what we're dealing with here. I think that oscillator is reset, but he probably needs to reset a little more. So I reckon that the NVIDIA is gonna move sideways for a while here or pull back. Here's a Palladium ETF here. This is my YOLO setup. And basically what YOLO setup is, something like ETF or stock crashes down quite heavily. So it has actually lower probability of playing out. Keep in mind, whenever I put out YOLO setup, it means lower probability playing out. But if it does play out, it will give you very handsome reward. So high risk, high reward type of setup here. But you can see, technically speaking, came back down to this pivot here, 89, 90 or so. That oscillator, again, this is a monthly, guys. We're really like looking at big picture. I'm going all the way back down to 2009. So I'm looking at like 15 years of worth of data here. There's a monthly chart. Each candle represents 1 month. For the monthly chart to get into extreme oversold, and we just crossed up. And Palladium, though, there's some whipsawing action could happen here while it's spacing out. Just keep that in mind. But monthly oscillator is pretty rare for it to, whipsaw. But Palladium did whipsaw here 2015-16. But even then, if you're not approaching it like a day trade, again, whenever I analyze weekly and monthly charts, it's not about for day trading or anything like that, or short-term trading or swing trading. It's for more of a longer term, like a position trading. So like if you're along right here, and then if you add it right here, and if you add it more right here, and ride that all the way, that is a huge winner, right? That's how you would position trade and semi long-term invest, and that's my specialty. Perfect. Anyway, so that's sort of the setup here. So it's not one of those things where you're gonna go long, you're gonna place a tight stop. That's not how it's gonna work, because it's gonna take your stop, it's gonna go up without you. You know exactly what I'm talking about. We do have a bullish divergence here on the histogram, and that bullish divergence tells me, and you can see we got a little bit of accumulation right here. You see that little green, the things coming up there. They're possibly smart money's already accumulating in this vicinity here. This is the last one. Yes, this is the last one. Let you guys go with this. This is a mid-term moving average on the daily. Keep in mind, this is a daily chart. Daily. Each candle represents 1 day worth of data. This is Spider daily. So you can see daily, that's a mid-term moving average. Mid-term moving average has been, or it has an impressive resume, because that mid-term moving average is been supporting the buyers. As you can see, when we did see that decline, you can see it 3 times. It was retested. It held. You can see how much of a pivot it was. It was a resistance here, and then it was support here, and then it has been acting as support last week. And on top of that, you can see that oscillator fully reset. Only question is though, is that oscillator gonna maybe do something like this? It goes up and come right back down, right? It comes down, goes up, comes back down. Only problem is when this thing happened, we lost that midterm. So when this thing pulled back and when it got up, remember that midterm was lost. This time midterm held. So then is it gonna look more similar to this, right? So that's what this chart is conveying. There's a possibility that we could potentially see continuation to the upside. Remember what I said about the 65-minute chart, that island up gap? You could see island up gap here too. Island up gap is right here. There's island up gap. This island up gap, as long, this very simple. If this island up gap remains, this island up gap is protected. Bulls will find a way. As long as this island up gap is protected, bulls, no matter what happens here, bulls find a way to fill this, bear command center, and they'll make new all-time highs. As long as that island up gap remains. If the island up gap is filled and then bears break this midterm, if bears break that midterm, watch out because we could see a further correction.